Good morning, everybody. This is the live market open for October 12th. Today is Monday. Some markets are on holiday, but there's still quite a lot of action. I'm Yohay Elam, ForexCrunch.com and Market Movers podcast, doing the show for a fixed rate every morning at 8 GMT. So let's look at what we'll have for you today. So we'll talk about the recent developments, charts and levels, and talk about the next 24 hours. And most importantly, we're awaiting your questions. Good morning to everybody that's here on the chat and everybody watching. Okay, so let's see. It's been weekend. Before the weekend, we had employment data from Canada, and that was quite mixed. So on one hand, we had a rise in the unemployment rate, which is quite negative. On the other hand, we had a good job growth of 12,000 people. The Canadian dollar continued rising, but that was mostly due to the continued rise in oil prices. In the US, import prices beat expectations, but they still remain quite low. Okay, so before we move on to the weekend's news, let's just take a look at the Canadian dollar. We're seeing that after breaking under 129, the initial break, under 130, it went back up above 130. And then a second break seemed already much more successful, and we're now at 129.15. We can see a double bottom beginning to form at the round number of 129. So let's say the employment figures didn't do any damage. Okay, now we had a weekend, and the weekend was not boring. We had quite a few developments. The International Monetary Fund, IMF, is meeting in Lima, Peru, and many officials from the Federal Reserve have been speaking from there. The most important development, as I see it, is a speech by Vice Chair of the Federal Reserve, Stanley Fischer. Fischer said that he still sees a rate hike in 2015, but that's sort of an assessment, not a commitment, and that he worries about global markets, and that adds to the sort of bearish sentiment against the dollar, which we've seen, especially last week. We'll run over the charts just in a few minutes. In addition, we had the ECB president, the chief of the European Central Bank, Mario Draghi, supporting Greek debt relief. He also said it must come together with an implementation of the program. So we're not seeing any impact on the euro from Greece, but there's always something going on. And from the Bank of Japan, we talked many times here in the show that they might act on October 30th. There's a big meeting. They have the semi-annual outlook, but it doesn't seem they're too much in a rush to act. He sees inflation still on target, more of a wait-and-see approach. Okay, so these were the developments over the weekend. Before we move to today's event, let's look at the charts. Interesting thing that we had on Friday is that also the euro finally joined the commodity currencies, and the euro also began rising. So if you remember, the euro was capped under downtrend resistance, and finally it broke higher. And the key level here, I don't have that chart for you right now, but let's see if I can get it on. Anyway, we had a break above downtrend resistance. It was sort of limited into a wedge, and then even tackled this high level, 113.75. Okay, so that's where we've seen the pair. Let's see if I can get the chart with, yes, here we go. Can you see this one? I hope you can. And you can see that we have a clear break above this downtrend resistance line. Why is 113.75 important? This was here at top, okay, a few months ago, and also back in 2003, it was an important line. So that was, we're seeing the pair currently struggling with this specific level, okay? Above this level, most important one is 114.60. Okay, that's of course a double top. Let's put on the daily chart and it will be much clearer. Here we go. 114.60 is a really important line because it was a double top once back in May and then also in September after the Fed. At the moment, we're currently in a lower level, still battling with 113.75, which is important. To the downside, we have 113, more 112.90, and 112.15. Good morning, Jack Sir Wild. I see you have a question. So Jack asks, do you think that's just stuck to keep the market guessing? Jack's question, I guess, is in regard to what I said about Stanley Fischer. Yes, of course, the Fed does not want to commit to anything like any other central bank. Well, sometimes they do want to commit and they do forward guidance. But if there's an upcoming move in the near future, they want to keep markets guessing because they don't know by themselves where the data will lead and they want to remain data dependent. But this, what Fisher said, Stanley Fischer said that it's not a commitment to act in December. He still sees it as possible. He still sees the markets uncertainty from international developments, from China, especially from other emerging markets. So I think that sort of serves as a reaction to the non-farm payrolls, which were terrible. And Stanley Fischer has been one of the more, he's been in the center, close to Yellen, but a bit leaning to the hawkish side, a bit talking about raising rates. So I think that he wants to keep markets guessing, but also raise an air balloon of hot air about changing the backtracking from a December rate hike. Of course, everything depends on the data, but the Fed wants to keep the options open. Good morning, Vikrant. Good morning, everybody else. Let's continue talking about the charts. Pound dollar. Here we have, well, basically it was a good week for the pound last week after it fell so much and reached this bottom here at 151.15. We've seen a very nice climb. The pound decided to ignore the sort of dovish outlook from the Bank of England, which saw weak inflation and ignored wages. And look more at, for instance, there was positive industrial production. But if Fisher really hinted us that we're not going to see a rate hike, it could be damaging for the pound as well. Okay, because the Bank of England is expected to raise rates after the Fed. Okay. Good morning, everybody. Let's look at dollar yen. Still stuck here. The yen is the only currency pair that didn't gain against the US dollar last week. First, we had a rally in commodity currencies, then the pound joined, then the euro joined. But the yen is still, dollar yen still hugging the 120 level. But what we know from the yen many times is that it tends to trade in a very narrow range for long periods of time and then make a violent move higher or lower. So where do you think the next move will be? I'm not sure by myself, but a lot depends on what the Bank of Japan and the Fed do. Okay, and let's continue with currencies. I see the question from Vikrant. We'll reach pound CAD, but let's go over the other charts first. Dollar CAD, as we see, it went all the way up to 134.60, the highest in 11 years, then began moving down, a small correction after a first false break above 130, reached almost around 130.70, then resumed the downfall. 129 is critical support, followed by 128.60. 128.60 is important because that was, let's put the daily chart on, and you'll see that was a clear separator of ranges. Okay, so we have 128.60 right here was the top of the pair in February and March. It's a double top here. Now it turns into important support. Okay. So this is a key line to watch to see if perhaps we have a change in trend. All right. So that's Canadian dollar. Let's move on to the Aussie. Also, the Aussie had a nice week, rising from the double bottom here, making, let's count this. It's 1, 2, 3, 4, 5, 6, 7, 8, 9 consecutive days of gains. Quite impressive, no? So we had a break above the 7270 level, which was the post-Fed high. It was seen in mid-September. So we had hesitation before this line, then a break higher. The lines we can mark to the upside are, of course, the current highs of 174, which is around level. Let's put it right here. Okay. And above that, we have, of course, the round 75 level, which was also talked about by the Reserve Bank of Australia, Glenn Stevens, as a line to watch out for. And the downside, we have 72.70 turning into support, 72.80 to be more precise, and 72 to the downside. Okay, let's move to the Kiwi dollar. Also made quite a move. At first, it was stuck here at resistance at the 67-cent level, but also following a very similar pattern to the Aussie dollar. Next line of it's quite close. The next line of resistance, I would put it right here at 67.40. It's not that far. Let's take a wider look and see if we can mark further lines to the upside. 66.50 serves as support, and higher up, well, not much going on there because we had a very, very sharp fall in the Kiwi. So the line I would mention is right here, 69.05. Okay. Now, before we talk about other currency pairs, let's answer Vikrant's question. Vikrant's question about pound CAD. All right, pound CAD, an interesting cross. We don't always talk about. Not many traders are interested in so many crosses, but as you said, Vikrant, it has interesting things going for it right now. So let's put a few lines here on the chart. Technically, it looks like a good short. Yeah, we're seeing here a double bottom, and if we break under this level, we could have it fall to the next level, which is, let me just put some levels right here. Okay, so let's first talk about the levels that I see here. Currently, we're at 198.38, just under 2, a very, very, very round level. Further support is basically right here. This is a double bottom. We're looking at the daily chart here. Okay, so we're seeing the pair hesitating around 198. It has been already lower, but it's sort of dipping, looking for a new direction. Next line is relatively close, 195, and then because that was the top back in the beginning of the year, and then we have 188 as support. As resistance, we have 205 and 210, more or less. Regarding the fundamentals, it depends on the mood in the markets. If last week we had a good mood in markets, okay, so we had the Canadian dollar rising very nicely and the pound sort of lagging behind. Because commodity currencies were doing well, prices of oil were doing well. That's supportive of the Canadian dollar, in this case, short pound CAD. Okay, and regarding the pound, we had well, the pound was just not a risk currency, just joining a bit later. Now, if we have more moves here, depends on if the mood continues being positive. That means the Canadian dollar can continue rallying, and this will support a short. But if the mood, as I suspect, can get a bit sour, we have more data from China this week, then I believe we can have a reverse, because the Canadian dollar, the Australian dollar, the New Zealand dollar might sell off, okay? And the pound could be more stable in this sense, and then we could see the pair move back up. So I don't see a break quite yet, and to be a bit more convinced, technically, we'd need to break 195. So I'm not sure that short is the best. I mean, it doesn't scream short to me. Could be a good move, but I'm not really sure, because I think that we might have fundamentals turning against the Canadian dollar. Okay. Good morning, Tom. Good morning, Jack Sorwell. Once again, Jack says Japan is facing hard times. Yeah, we're not really sure of what's going on in Japan. On one hand, the economy isn't really growing. We had probably a recession. We'll know that later this month. We'll have the semi-annual outlook. Population, of course, isn't growing. This is a worse. This is a bigger picture, long-term picture for Japan. But it doesn't mean if there's trouble in Japan, it doesn't mean a weaker Japanese yen. Okay, because we need more stimulus to have a weaker Japanese yen. If we have trouble all over the world, we have a stronger Japanese yen because it's safe haven currency. Okay, another question from Tom. Good morning. What about euro pound? I guess short to 73.80. Let's look at euro pound. Cross we cover every day. It's sort of stuck in consolidation mode, hugging 74 now. 74.40 is resistance. 73.80 is support. Okay. Further lines below, 73 level, and we will have to adjust our lines here. And at 72, we have much stronger support. The reason for going short is that, the British pound is, the British economy is doing better than in the Eurozone, and we might expect more stimulus from the ECB. And the reason for going long is, of course, that we have a referendum in Britain about remaining or leaving, and it's quite close now, so that sort of weighs on the pound and helps euro pound. Okay, so we have more talk about the Britain remaining in the Eurozone. Maybe you could see the pound rise higher, so that would support a short. Regarding the euro, we have we'll have some figures from Europe. Tomorrow is a big event. Tomorrow we have the ZOO economic sentiment from the Eurozone, from Germany. It's expected to remain positive, to slide once again, but remain positive. But we might see it go negative only because of Volkswagen, because of VW. Okay, so that would support a short. Also, we could see a short because, but a bigger move in the euro, I think we would see only next week when we have the ECB decision. Okay, I hope that answers your question, Tom. Now we have a question from Tico about pound Aussie. Pound Aussie. Let's just look at the chart. Let's see if I have it here easily. Pound. Yeah, it's the GBP odd. Let's see if I can pull up this chart. Try to answer the question about where I think it's going. Okay. Oh, that's quite a nice move. Thanks for pointing that out, Tico. Let's put a few lines here. Also here we have a double bottom right at 208, 208.50 more or less, because we've seen the same line back here in August. And let's put some lines on the upside as well. Here are more lines to... Okay, so if we have a fall below the current levels, and that's a very interesting pattern over there, we have 205, the next level, and then 202.50. Okay, and on the top side we have 213, and then just 219, and above that 222. Okay, so pound Aussie is interesting. It has fallen quite a lot because the Australian dollar rallied really hard last week. Prices in copper prices, China was in vacation. I think we might see there's a better chance of a bounce here, assuming we get bad news from Australia. So it's now a sort of critical support, break or bounce. We'll have to wait for data from Australia. We also have data from the UK, inflation and wages, and that could have an impact as well. If we see wages continuing strong, that would support the case also for a bounce in the pound. But that's really important to note wages in the UK. Okay. Scott, good morning. Missed your take on EU. Any chance you can get over it again? Yeah, let's answer more questions and then get back to euro dollar. Vagrant says, thank you for your pound CAD views. Really appreciate. You're most welcome. Okay, let's cover a few more currency pairs that we skipped before, and then I'll get back to euro dollar. So we have dollar Swiss currently at 96 in the lower end of the range. 95.20 is support, 98.40 is resistance. But all in all, we're seeing, well, this is the daily chart. We're looking at the hourly chart. We did see it fall last week as the dollar fell across the board, but yeah, I don't like the Swiss franc too much to trade on. Euro Swiss, very, very stable, 109.40 within this limited range of 108.70 to 110. Euro pound, okay, we talked about that just a few minutes ago. Euro yen moving nicely higher because dollar yen is really stuck in position hugging the 120 level, and euro yen, the euro dollar is going up, so we've seen it break above resistance at 135.50. The next level to watch is 137.30, and then let's add another line right here, which is at 139. Okay, so these are the levels to the upside. To the downside, 135.60 turns into support, followed by 134.24. And one currency pair you didn't ask about, but I know that it's usually popular. It's the dragon pound yen, really climbing very nicely, sort of along these stepping stones. 184.50, the really high level to watch on the upside is 186, and then 188. On the downside, we'll just have to step back down. It sort of steps of 50 pips, 184, 183.50, 183. It's sort of quite balanced as far as I see it, all the way down to the round level of 180. Okay, of course, there are many more crosses and currency pairs, so we have a specific question about euro dollar. So euro dollar, the important lines, if you refer to that, Scott, we're currently at an important line of 113.75, and to the upside 114.60. We have an important figure from the Eurozone tomorrow, German zooeconomic sentiment. On the downside, we have, well, 113.40 is a minor line, and then 112.90 and 112.15. Okay, let's go, let's see what's on our schedule today. At other times are GMT, 12:10, Dennis Lockhart, he's sort of, from the Atlanta Fed, he's centrist, but a bit hawkish. It'll be interesting to hear what he says. Charlie Evans of the Chicago Fed, he's a dove. At 5:20, we have at GMT, we have the Bank of Canada's Stephen Pallot talking. Let's see if it moves the Canadian dollar now that it's strengthened. And at 8:30 GMT, we have Lael Brainard. She doesn't speak too much, and so it'll be interesting to hear what she says about the next move of the Fed. Today is a holiday in the United States, Canada, and Japan, so that means liquidity is low, and when liquidity is low, we have usually less moves and then suddenly stronger moves. Okay, and let's also look at what's on our calendar later this week, because today's holiday, but then we have more interesting events. So first of all, the small events for tomorrow, midnight, half past midnight, we have Australian business confidence for those of you trading the Aussie. Let's see what's expected. Let's look at the calendar right here. So we have, business confidence was at a positive figure of 1, and now it's supposed to, let's see if it goes up or down. And then at 6 GMT, we have final employment figures from, we have, final inflation numbers from Germany. But beforehand, around 2 GMT, we have trade balance from China, and that's a key event, of course. The exact hour is not known, but it's around 2 GMT. It will be important to see not only what the actual trade balance is, it's going to be positive, it's going to be a surplus, but it's important to see if exports and imports for September rise or fall. And it's an important figure because in China, figures like GDP are not really trusted. They can be invented, tweaked, modified to serve political interests, but exports and imports, as they depend on other countries as well, they're harder to play with. And we've seen last month, when we've seen in August trade data fall, it really hurt the mood in global markets, and it hurt, of course, the Australian dollar. Okay, so these are the key events to watch soon. Before we move to next to the big events later this week, I have another question from Vikrant. He asks, how do you determine a major support resistance and a minor? Any specific rules? Well, specific rules, I wouldn't say. I just look at the charts and try to see if this was a line that was attacked more than once, for example, then it could be, if it's a double bottom, double top, it makes it stronger. If we've seen the pair chop above it, if it's a resistance line, then it's weaker. If we've seen it touched, if we see it as a separator of ranges, if we see the pair getting stuck under one specific level, then rising to another one and staying above that and not moving back down, I see it as a very, very important level. If it's an older level, it's more important than a new level. So these are sort of the guidelines. I wouldn't call them rules. Okay, so that's to answer your question, Vikrant. Jack Wild, thanks for the compliment. That's great. Any more questions? Let's talk about the main events later this week. Okay, we have. So here we have Australian. These are the events for tomorrow morning. So the bigger events this week. Tomorrow, as I mentioned, Chinese trade balance, then UK inflation data. We'll see if inflation in the UK is still flirting with zero or not. It's, of course, a source of concern. Core inflation, the retail price index will also play a role. Let's see if we have the expectations for tomorrow. So the headline number year over year is expected to stay at zero. Okay, it was 0 last time. And that's of course also due to oil prices. But when we have core inflation, we're looking at 1% at the moment in the UK. More big events for tomorrow. German zoo indicator. Let's see if we have the official expectations here. We are expecting a fall from 12.1 to 6. I believe it could go negative because of VW. It'll be very interesting tomorrow to watch. It'll be just after the show tomorrow. We'll talk about it more in detail tomorrow. Later in the week, on Wednesday, we have Chinese CPI, a bit less important than trade data. And then we have UK employment figures. And what's important to watch now in employment in the UK is the wages. We had 2.9 rise year over year in wages, which is very good for British workers. Let's see if it can continue. Then we have US retail sales. It's, of course, a huge part of the economy in the United States. It's very important to watch. On Thursday, we have employment data from Australia and US inflation. And let's see if we have something on Friday. Nothing in particular, but certainly it's going to be an exciting week. Tomorrow and Wednesday are the most important days as I see it. Vikrant has we have another question from Jack Wild, asking, wasn't China trying to make the yuan the standard currency when before the old man in charge died? China does want to have its currency more more tradable, more international, more used as a reserve currency. It's the world's second largest economy, but it's not really tradable. So in terms of trade, it's being used in a very small percentage of trades in comparison to the usage, the size of the economy and the size of the population. Of course, it's the world's most populous country. They did try to do this move in August by letting their currency float a bit more, and of course it fell to please the IMF, to make it more sort of acceptable for the International Monetary Fund. And what happened was bad reaction. Markets panicked. They saw this as a move of China depreciating its currency because the situation is bad. They didn't see the attempt to internationalize the currency. I think they will continue taking very, very small steps in that direction. Regarding the regime change, I think there's no difference between the current regime in China since late 2012 and the previous one regarding the desire to internationalize the yuan. More questions. We can look maybe a few more charts. Lots of people here online on the chat we haven't heard from. I'll be glad to hear your questions. Let's see if we have any. Usually during the show, we have an event coming from the UK. I think there's nothing on the agenda today. It's a relatively quiet day, but as your questions have shown, and as we've seen yesterday, we had quite strong, yesterday and Friday, quite strong move in quite a few currency pairs in sort of critical levels. Jax asks again, right? That's why they went on that gold buying spree. Yeah, we have Chinese accumulating lots of gold, which is of course good for those of you who are trading gold. Maybe let's look at the price of gold. Let's put the screen back on. Gold, right here. So gold is capped currently by 1170. This risk on mood in markets was very positive because, well, apart from buying commodities, markets were buying also, well, commodities, I mean, ones that can be used in a better manner in industry like oil, copper, or milk for agriculture. I'm talking about also gold, which is more speculative, and we've seen it move higher last week. So 1170. 1170 is a critical line of resistance. 1156 is support, followed by 1142. Let's see if we have more levels to the upside. Yeah, this peak here is why 1170 is important. Then we have 1180. All in all, 1182. Sorry. All in all, the moves in gold are a bit limited to what we've seen a few years ago, but still worth a look. On the downside, of course, 1100 is critical support, but we're currently moving a bit more to the upside. Good morning, Pan. A question from Pan. Yohay, how do you enter trades? Well, currently I don't trade. I focus on publishing. When I did trade, I looked at the fundamentals, looked at the long-term charts, and then looked a bit drilled down to the short-term charts, to the hourly charts, for example, to try to find support and resistance lines as places to put entry and exit levels, stop loss, all these kinds of things. So that's sort of the philosophy in very short. So yeah, fundamentals move markets in the longer term, and technicals are very useful for determining when to enter, when to exit, and what levels to take a profit in. Okay, hope this answers the question. By the way, I guess you all noticed this, but we have, of course, some kind of delay between the time that I speak and the time that you can hear my voice. That's why sometimes the answers to your questions might be a bit delayed, but we're trying to answer all the possible questions. So far, I think we're doing quite well. While we wait for more questions, and just before we wrap up, let's see another currency pair that we've been watching last week, Aussie dollar against the Kiwi dollar. We've seen it now currently trade in a range 108.60 to 110, a bit similar to the levels we're seeing in Euro Swiss. These countries are close. I posted a trade recommendation on my website from some bank saying to short this currency pair because, well, New Zealand exports milk, which is always useful, and Australia exports more copper, iron, which are used in China, and that's going down. So we're still around looking. We've seen here this kind of bottom, which was exactly at support at 108.60. Will we see it break lower or bounce from this level? That remains an open question. Pan says, thanks. Yes, my bias is up for price action at the moment. Very, very difficult for me to gauge. Well, Forex trading, of course, is never easy. That's how things are. Just trade with less leverage, with more care, minimize losses. It's the best way to go, of course. It's not only about making profits, but also minimizing losses, minimizing the drawback. Okay. Okay, let's take just another look at euro dollar on not the daily chart. Let's look at the 30-minute chart. And we're still seeing it struggling with 113.75. The high so far has been 113.83. 114.60 is the really, really critical level on the upside. So that's where to look. Jaxar asks, what's my website? My website is forexcrunch.com. And you're also welcome to listen to the podcast at marketmovers.com. Cheers. Here are all the contact details in any case. The website, Twitter, Market Movers podcast, Android, iOS apps, all that stuff. Okay, I think it's time to wrap up for today. Let's begin from the beginning. Okay, so this is the wrap for the live market open for October 12th. It's Monday. Many markets are on vacation. We're talking about Japan, the United States, and Canada. That means liquidity is a bit lower, and that means we can see very slow movements and then some wild reactions. Developments that we've seen last week, Canadian employment data was mixed, but the Canadian dollar still gained thanks to oil prices. And afterwards, we had a few international developments. The FOMC Stanley Fischer seems a bit less committed to a rate hike in December. This weighs on the US dollar. The US dollar suffered a lot last week from rises in commodity prices, hesitation from the Fed in the minutes, and the commodity currencies rallied first, and then the pound and the euro joined. The only one that didn't rally against the dollar was the Japanese yen. That's why we're seeing many yen crosses moving higher. Okay. In addition, ECB's Draghi supports Greek debt relief alongside implementation, and we're seeing also less commitment from the Bank of Japan to act in October 30th. But we'll talk about that, of course, closer to the event. Okay. Events for today. We have at 12:10 GMT, Dennis Lockhart speaking. He's hawkish. Evans, he's dovish. Bank of Canada's Stephen Pelosi talking with dollar CAD at the critical support level of 129. And then Lyle Brainard, when market liquidity will be quite low, but we don't know exactly what she'll say. Could be quite interesting. Later, early morning, at night here in Europe, we have Australian business confidence, and around 2 GMT, a very important release from China, Chinese trade balance. It's I believe it'll be a bit negative. That means less exports, less imports, sort of more worries about the global economy, more worries for the Australian dollar, and final German inflation data just before the show tomorrow morning. So these are the big events awaiting us. Looking at the charts, we're still seeing many currency pairs maintain their highs against the US dollar. Euro dollar struggling with resistance at 113.75. Pound dollar maintaining its highs here, 153.50. 154 serves resistance, so the pound is a bit more hesitant. Dollar yen hugging the 120 level as always. Aussie dollar continuing its gains, moving a bit higher. Resistance at 74 and 75. Important support, strong support at 72.80. Kiwi dollar 67.20. Also, both antipodian currencies are moving nicely higher. 67.22, 69 is the next big level to watch. Okay, so these are the levels we're watching. Markets are on vacation. So now in Europe, most markets are open and liquidity is still high, but things can get worse later on. I mean, in terms of liquidity in the US session, which is usually quite active, we have both Canada and the US on vacation today. So it's Columbus Day. But tomorrow everybody's back to full business, especially with this Chinese figure. The Chinese were on vacation last week. So I think it'll be very, very interesting. It'll be another interesting week in currency markets. Okay, so I guess that's it for today. I wish everybody safe and successful trading. Remember not to use too much leverage and to trade responsibly. I'm very, very glad for all your questions. We'll be here at the same time tomorrow, 8 GMT, and I'll be glad to answer more questions, more currency pairs, get some feedback. Do you want more fundamentals, more technicals, everything? So until tomorrow, have a great day and trade responsibly. Bye-bye.